Hello and welcome to another update video about gold. A lot of you asked me for a gold update. Yeah, I've tried to make some time for it because I'm quite busy at the moment, but not much happened actually. Not much happened. The overall thesis is still valid. The micro patterns in this correction have shifted a little bit. We have no confirmed breakout yet to the upside. And there are various, we're caught in the messiness of a correction here. And as I said to you before, really, I mean, we are in a bullish market, in my view. It's just a matter of how much of a pullback do you allow for your own portfolio, I guess, when you're trading this. Because if we really are, for example, in the yellow count, even though I don't expect it, but technically the market could dip and would still be a valid B wave, could easily dip down to 1944. Why is that? So because if the third wave here to the upside, 1 second, why do I have this twice? Can take that out. So if this third wave is really the ABC structure in yellow, then this B wave definitely could get a deep pullback into the lower support region here. Okay, so be prepared for that. I don't necessarily expect it, but I cannot rule out the yellow count. So if this is the white count, which is also an ABC structure, just a different way of counting it, then I really don't want the price to break below the 6th of May low, or what is that, 6th of May? Yeah, this Monday low at 2,286. Okay, so I want that level to hold. To keep the perspective alive, this could be the white count. In the white count, we're dealing with an ending diagonal in the C wave, and ideally the low is in. Okay, maybe the wave 4 is forming a triangle here. That's possible. Or we are already in the 5th wave, and we've seen the A wave up, we've seen the B wave down, and we're now starting the C wave from here somewhere. But it's all not very clear, all right? So that's, I think, why it's so important just to be aware of the relevant trigger points. So here to the downside, I think the white count will become very, very unlikely if we break below that red line. But it would still open the door for the yellow count, which is, or keep the door open for the yellow count, which is not bearish. Short term it is, but it could allow for another entry point here in this region down there. For now, I'm just exploring the idea that either this is forming some kind of a WXY structure, as I've shown here, where the low could technically be in, even if the Y is above the wave W low, and even that could be a B wave, could also be a 4. That's just both possible, all right? But both point to the upside. That's important. Both point to the upside as long as we are holding the red line. Below the red line, it's only yellow from a bullish point of view. Okay, so I hope that's clear. Also, it doesn't matter in the short term if it's a wave 4 or a B wave here. It's just that both are possible, all right? And if it is, if it's a WXY structure here, the low could indeed be in, because then the Y wave would be an ABC, but I have not yet a clear 5-wave move up to indicate that we've bottomed. I would really like to see minimally a break above the descending trend line here. So why do I say a WXY bottom could be in? Because if we measure the length of the wave W, I go to the high of the wave X, then even though it's not reached it 100%, but it came very close to the 100% extension at 2,290. So that's an ideal length for that Y wave. Yeah, it could get another low, absolutely. But as I said, it's all about that red line. And interestingly, the 100% extension at 2,290 ends just above that red line, just above this W low. So what can I say? We're still caught in a correction. It's sideways consolidation. It is, I think, quite bullish. It hasn't really done anything since April. So, it's quite a boring chart at the moment, but that's what the metal corrections typically are. As I said, I'm watching for a potential trend line break to the upside. I mean, that would be a breakout trade, if you want to call it like that. I don't have a very clear support area here because this is down here, but if it's a triangle, it might not even get down there, right? So that's the difference. But therefore, if you want to go long directly, I mean, there's a chance for a breakout trade, but that depends on your own trading strategy. Or you just set the stop below the red line. That would be an idea for a long trade from here. It's just that from an Elliott wave point of view, I cannot confirm a low in place yet. So overall, I'm looking for higher prices. Even if we break below the red line, then it might send us into this support area, and it might, at least if the pullback is corrective, I would still look at higher prices, just in the alternative yellow scenario, in which then, however, the third wave would be much more aggressive, because the C wave would be longer than what a wave 5 would be in the white count, if that makes sense. It would basically move everything higher. It would be a bit counterintuitive, because first we would get a deeper pullback, but essentially that C wave rally would then be a bit more aggressive. And not much more to talk about really at the moment on the gold chart. It just takes patience here. Gold corrections take a long time, and at some point it's going to make a move. It will happen quickly, and then the next long consolidation is going to happen. There would be wave 4 then. But overall, nothing, let's say nothing unplanned here, or nothing surprising, nothing breaks, So hope you liked the update. If you did, please hit the like button, leave a comment, and subscribe. And if you really like the content, then please check out the channel membership. Down there in the description, you'll find a link to our stocks and S&P 500 service, where you'll get daily video updates about the S&P 500 and regular updates about stocks if you're interested. So check it out. Have a great evening. Bye-bye.